Hello, this is Fraser Anderson from Vestigo Ventures. Today, I'm here with Giri Addanki, CEO of Acorn Finance, Vestigo's newest portfolio company. Giri, it's great to have you with us today.
Yeah, great to be here. Happy New Year, and really excited about working with you guys. I know the last couple of months were focused on getting the deal closed, and now really excited about having a long-term relationship with your firm.
Awesome. Yeah, this is the fun part for us too. So I suspect most of our viewers aren't quite yet familiar with your story, but we'd love it if you could just start by telling us, why did you decide to build this company, and what is it that you do?
Yeah, sure. So as a background, I spent over 20 years with really large banks like Capital One, Citibank, Barclays, focused on building lending products, including credit cards, mortgages, personal loans. And really, if you think about all the junk mail that you get, you can put my face behind it. It is in every month, we really figure out how much do you invest, and send the mailers out, send the emails and other via other social channels, send messages out so that when you have a lending need, we are in sight in mind. So that's kind of the way these companies operate. And within the last 5 or so years, I focused on a subsegment of this space, which is home improvement lending. So the use case is, your heater breaks down, you call a contractor, and you expect it to be $500. And he comes, he looks at it, it's like, sorry, Fraser, you need to replace this. It's 12 years old. So you basically are now, looking at a $12,000 damage. So what 2/3 of Americans don't have, about $500 or $1,000 in emergency expenses. So you're like, I don't have the money. So the contractor then pulls out an app, and you can apply for a loan. And this model has existed for over 20 years. And although contractors can generate 30% more revenue, because or else they would have lost their appointment, only about 10 to 15% of contractors are using this model. And the reasons are a couple. Number one is the model that exists today is a three-party model. So just like when you go to a car dealer, you don't get the money, but the car dealer directly gets the money. Here, the contractors get the money from the lender. Consequently, they have to get approved to use the point of sale solution. So only about half of the contractors actually get approved, because most contractors in the US, about 80% or so, are really small mom and pop shops. Really the wife taking care of the office, booking appointments, and the husband's, fixing the roofs, and have a few subcontractors. And they don't want to apply for these products. They also, to apply for a point of sale, you have to submit financial, social security number. They just don't want to do that, or they don't get qualified. You have to be in business at least for 2 to 3 years, and there are a lot of up and coming contractors who don't even get to use these point of sale solutions when they actually need them most, because they need to grow. Number two is, once they start using the solution, once you as a customer take a loan, they only get part of the amount, and then now as a deposit, and then they have to chase the customer to do a completion certificate, and then they end up going to the lender and chasing the lender to get paid. And if something happens in this process, the customer is not happy, now they don't get paid. So that's the second thing that we hear from contractors all the time. And the third thing, finally, is these solutions cost the contractors today anywhere between 5 to 15% of the project, which is extremely steep. And they don't get it. They're like, first of all, lender, I'm sending you my customers, and I have to pay for it. It just doesn't make any sense. So our model really basically replaces this current model. Think of it as an Expedia meeting point of sale, or a Lending Tree meeting point of sale, where what we've done is, same use case, the contractor pulls out a small app, you fill out an application, and we have 6 lenders basically within 10 seconds who compete for your loan. And this happens via APIs, and there's no impact to the customer's credit score, because we do a soft credit pull, and then you see the loan offers on the screen, and then you can pick the offer that fits your needs the most, and then you are instantaneously connected to the lender. And then you fill out a few more pieces of information like your checking account number, routing number. Money gets to you in a couple of days. So for a contractor, you've just become a cash buyer, and the contractor is just a referral mechanism. He doesn't need to ask you your social security number, income, and take all that. They're more comfortable with that. Number two is it's 100% free. We don't charge the contractors anything. We actually get paid 1 to 2% from the lenders. It's like an affiliate model. So that's the second advantage. For the customer, the traditional model doesn't provide a lot of options. Whereas here, truly you're getting, because the traditional model is one lender to one customer. Here we have several lenders, so you are truly getting the best possible options. For the lenders, with the traditional model, what used to happen is you used to basically get accounts and assets. With the new model, the multiple lenders can actually get customers who they can now cross-sell. And this is relevant now because the lending and banking products are going marketplaces. 5-7 years back, we didn't have enough banks banks didn't want to be a part of the marketplaces. They were like, airline companies 10-15 years back, where you went to one airline company and bought tickets. Now, customers are used to marketplaces with hotels and cars and airlines, so they want the best possible products. So banking is getting comfortable putting their products into marketplaces, and we are taking advantage of that by bringing that technology to point of sale.
That's fantastic. And can you talk a little bit more about how important point of sale is, and what's your go-to-market in terms of how you're going to get those lenders onto Acorn? Because one of the things that we just love about what you're doing is, I think most of us would have expected to have some kind of SaaS platform where you use some smart AI to target a customer who you think might need a home loan, right, and you have some slick interface. Whereas, that revelation of we just need to be there when they need us, and this is how we do it, made us fall in love with Acorn. So could you talk a little bit more about that?
Yeah, absolutely. And that's a very interesting point. So as I was saying, in banking, what I was doing was I was direct mailing you, sending you letters twice a month, because when you have the need, I wanted you to respond to that, right? Whereas what happens with point of sale, and now we can think in broader terms, especially when we're talking about go to market, is you didn't have a need. You just thought it'd be $500, and the contractor just created the need for you, and then now you've taken time off from work, you're at home, and now you're like, crap, I need to find 12 grand. And at that time, the contractor is able to really provide value by helping you with the solution. And even if you can afford it by maybe liquidating your 401k or putting it on a credit card. A lot of people don't want to put large items on the credit card. This is a simple way to see if you have other options, again, with no impact to your credit score. So the timing of this is really, really critical. So coming back to your go-to-market question, we actually are looking at three different areas. One is the home improvement area, where we talked about the need being generated, and really there's two segments there. One is we work with large manufacturers who have multiple contractors working with them, and we say, hey, manufacturer, here is this point of sale solution. If you evangelize this to your contractors, again, they don't pay anything. They make 20 to 30% or 30 to 50% more revenue. Consequently, where are they going to buy the product from? From you, so you make more revenue. So that's one. The second subset of that home improvement space is there are several prop tech companies that have really started growing in the last 5 to 7 years. And what they've done is they've consolidated contractors. So one of the companies that we are very close to working with has tens and thousands of contractors. And what they do is they basically, it's an estimation tool. And when you need a new HVAC, think of it as like, a menu like with a restaurant where you say HVAC $8,000, labor $1,000, duct work $1,000. Here, Fraser, there's a $10,000 invoice, and you say, "Yep, approve." Just below that, we'll say, "Hey, instead, do you want to pay $100 a month? Get pre-qualified," right? So we can now be a part of some of these SaaS platforms that are out there, again, add value to the contractor. So that's one go-to-market strategy. Then if you start thinking about where these needs are created, we're starting to see, we have other areas like home insurance is a great area where, and you guys have, insurance companies as an LP. So that's another exciting reason to be working with you. And that is where 50% of customers who have home insurance policies are underserved, are underinsured. So they don't know when they get a policy, how much policy they should get. So something happens, the house gets flooded, they pick up the phone and talk to the claims agent, and the claims agent is like, "Hey," and the total claim is $20,000, but by the way, you have a $5,000 deductible, and we can only cover, you've gotten a policy only for this piece, so now you're $10,000 in the hole, and we can only, give you $10,000. And the biggest reason for attrition with insurance companies is dissatisfaction with claims. So the use case is the claim agent just created this need. So instead of saying, "Hey, you're on your own. Hey, if you want, you can apply for a loan. We have a partnership." And then the claim agent can actually be right there on the screen and send you a little link. You apply for the loan. As I said, it takes 10 seconds. It's a very, soft way to help you out. So we're seeing other areas like this where these needs are kind of created, and we want to kind of get into those.
Fantastic. And now the last question is sort of fun, but I heard a rumor that you were quite the showman at Money 2020. Can you tell us a little bit about what you did and the sort of traction and excitement that it generated for Acorn?
Yeah. So Money 2020, every year they select 100 companies to basically showcase light on. These are, the top 100 startups. And within those 100 companies, they pick 20 companies that can pitch there. They have a 3-minute pitch and 3-minute Q&A. And although, our story is exciting for investors, really to a general common audience, it's lending and home improvement contractors. It's not that exciting. I had to come up with a way to make it a little bit more fun. So I dressed up as a contractor, went to Home Depot, bought a hard hat, got my tool kit and put, a tool belt, put a bunch of tools in there, and showed up as a contractor, walked on stage, and before I even started pitching, I went and tried to faked fixing a little light fixture, and people were like, "What's going on?" So anyway, and then I made my 3-minute pitch, and I had some Q&A, which was great. But the most exciting part about that was as I was working on this pitch in the morning, I was in a room, and it's basically it's a speaker lounge. Speakers get this room and you can go and make final changes to the deck. So I was in this room making final changes to my presentation. So I was this guy next to me who was like, "Hey, we just started talking." He was making changes too, and we just started talking about, he's like, "Oh, really, you left your job at Citi and started this?" I'm like, "Yeah, crazy move, but I wanted to be an entrepreneur." So he's like, "I always wanted to do this myself, but I've played around with different projects in my life." And he was like, "This is something that could fit our needs as well." So he ends up being the head of global payments at Uber. And we started talking about how, in my earlier thing, I was talking about how the Uber drivers have, their transmission breaks down, or they have a fender bender, and now they have to wait for 2 or 3 weeks before the car gets fixed. And a lot of them are hand to mouth. And Uber, coincidentally, on that day, announced Uber Money with a goal of helping their drivers. And one of the things that they announced is giving the drivers $100 overdraft, so that if you don't have money in the morning, you can't really to fill gas, you can't make money, so that they can help them make money. So we started talking about helping the drivers, and that led to a follow-up meeting, and that's another vertical that opened up, really focused, how do you help the gig economy workers? And what's interesting about that story is that use case would want, and as we talked with Uber a little bit more, they want us to innovate the other side of the marketplace, which is the lender. So about 60% of Americans have either no FICO or poor FICO, and they, a lot of these, Americans, they when they are in a part of the gig economy, how do you underwrite them? So there are some lenders who we are talking to who can actually leverage data that we have and leverage data that Uber has that can underwrite them better than the traditional FICO model. So so the point of sale solution that we need to continually improve and innovate on both sides of the marketplace.
That is absolutely fantastic. And I guess, where can our viewers learn a little bit more, stay in touch, and follow your progress?
Yeah, so I think number one is obviously our website has a ton of information. I would also encourage them that the best way to learn about us and our progress is really set up a 10-15 minute conversation. They should reach out to you guys. You have our contact information. We always continually give you guys updates. Would love to kind of have a chat. This is a very, very exciting area. It's moving really, really fast, and we're really thinking in terms of what are we going to see in the next 3, 5, 10 years. One of the things actually that's also happening, one of the investors in the syndicate specializes in blockchain, and lending is moving. Figure is a great example. They're doing a ton of stuff on blockchain and on the securitization part. There's also a ton of global play. There's a lot of Uber, for example. His second question was, "Are you guys global?" Right. So there's a lot of excitement going on beyond the U.S. because Europe, especially, they're mandating a lot of banks to move to kind of open API space. So I would love to kind of get insights from your viewers who want to kind of learn as well as answer any questions and just continue the discussion.
Awesome. So friends of Vestigo, you can leave comments under the video. You can reply to this email. You can check out what Giri's up to at acornfinance.com, or you can email any of us directly if you want to figure out how you can help Acorn. Giri, this has been a delight, and we're so excited about what you're doing, and I'll look forward to keeping all the viewers up to date on your progress.
Likewise. Hey, thank you so much for your time. Really exciting, and Happy New Year, and looking forward to working for the rest of the year.
Awesome. Bye for now.
All right. Bye-bye.